us now for more is Jonathan Ravelas, Senior Advisor at Reyes, Tacandong and Company. Welcome back, Jonas. Happy New Year.
Happy New Year.
All right,
Good morning, Kathy.
Good morning. What's your assessment of how President Maduro's captures impacting the global oil markets?
Well, basically, I guess the key word is more of a knee-jerk reaction of the markets in the near term. Most likely, we'll see some uncertainty. But again, hopefully the outcome will actually be lower oil prices now that probably the Venezuelan oil will have more opportunities to go into the global market. So that should be good for the Philippines, particularly we're a net importing country.
What about the geopolitics, though? Is that much of a concern in how that filters through to the Philippines?
Well, basically, if the geopolitical noise would probably be just, say, within 1 to 3 months, I think that could actually, it won't matter much. But if there's a speedy resolution to all of this, then we could probably go back to normal. And I think this is how the Asian markets are looking at it, basically because it's a net positive for oil.
Looking locally, we have inflation figures out tomorrow, Tuesday. That's the December inflation figure. And you're at the far end of all estimates of those we surveyed, 1.1%, even lower than the Bangko Central's lower end of its own forecast. How come?
Well, basically, I guess we've seen a very significant drop in prices. And I believe that probably it would be the lowest compared to the last 10 months. It will actually be the bottom. And moving forward, again, we have the impact of geopolitical risks, eventually consumption coming back. Probably in 2026 could slightly push inflation back to probably 2.3% for the full year.
But the corruption governance concerns, I've just spoken with Bobby Claudio a few moments ago of the Philippine Retailers Association. He did say that spending was cut because people were concerned about the governance issues.
Okay, let's look at the corruption issue like having a toothache. So at the moment, the government is doing its best to probably try to address these governance issues. I think at the moment we are taking pain relievers. I think people are waiting for a tooth extraction, meaning somebody to go to jail. But sooner or later, people will realize that life has to go on. And consumers are waiting, are hesitant to spend because of the uncertain business climate, which the BSP at its recent report on the business and consumer surveys highlighted a divergence, meaning consumers were hopeful that prices are coming down, while businesses continue to take a negative tone due to the governance issue. So people will remain hesitant to spend. But once we start seeing over the course of 2026, more cases to be filed, government in addressing infrastructure spending, particularly with the 2026 budget, confidence will slowly come back. And once we see private listed companies with their capex moving on in 2026 could eventually spark the return of this risk appetite. And that's why
it all depends on when that tooth extraction happens. Real wages, job creation, are they keeping up enough to support your slow but sure consumption story, or are we now seeing signs of household balance sheet stress building?
Well, basically, I think at this point in time, people are waiting for a signal. And I think once the fourth quarter numbers could be a surprise, it's not going to be 3.8 or 4%. If it's going to be higher than 4, then that could eventually provide the turning point. So we could have probably seen the peak negative sentiment in 2025. Right now, what we want to see is hopefully whether the tooth get extracted or a root canal. The key idea is to eventually see that things are slowly shaping for the economy. Whether it's going to be, of course, rate cuts are good, but rate cuts can only do so much.
So
But
if rate
once we
cuts can
start
only
seeing
do
the
so
sentiment,
much, and it's really
yes.
pain, whatever it is, it's root canal or tooth extraction. How do we trade then? Risk appetites for maybe the first quarter of the year. What is your recommendation?
Well, basically, I think the valuations are quite attractive for long-term investors looking at food, retail, real estate, and infrastructure. Probably um, are good long-term, positioning. Of course, the key word is accumulate because there's still risk on the downside. I'm a bit optimistic in trying to look at 6.5 by year end. Hopefully that we get these things moving, and if typically the rally begins at least maybe around early 2027,
All
probably
right.
moving to around 7.1 if things really do materialize in the first half, particularly the tooth extraction.
I'll hold on to that 6,500 on the PSEI. Thank you so much, Jonas Ravelas of Reyes, Tacandong and Company.